10 months ago, I shared a video on YouTube talking about how Toshi was the next coin that was going to go 100x. It went 100x, and the thesis behind Toshi ended up becoming one of the most talked about theses on Twitter, which is the idea of buying the #1 meme on every single one of these blockchains. Now that everything that I said has played out, I have found what I believe to be the next big crypto narrative into 2025, 2026 and beyond. And this narrative, I believe, is going to be where some of the biggest returning coins are going to come from, that are going to do 100x or more. Let's get straight into the video. I believe I have found crypto's next big narrative for 2025 and beyond. And no, this is not anything to do with meme coins. This is an entirely new narrative in a different sector of crypto that I think is going to overtake the meme coin narrative probably next year or the year after. It's something really big that everyone needs to be looking out for. I haven't seen anyone really talk about this online except for a couple people. One of these people is Luca Netz, the founder of Pudgy Penguins, who I'm going to be referencing quite a bit in this video because a lot of what he has said opened my eyes to what I think will be this next big narrative. And so right now, meme coins are all for shit. This cycle is the meme cycle. However, it hasn't always been this way. Last cycle, if you look at the top back in 2021, what were the best performing coins in a 7-day period? It was nothing to do with meme coins. Meme coins are obviously something that were popular a little bit last bull run, but it's really this cycle that they've really taken off. Last cycle, it was all about utility related projects that were trying to actually build something real. They were trying to get mass adoption, all these different things, and they've gone out of fashion because the token doesn't actually have anything to do with the project getting value. The project can get 1 million users, can be all great, but if none of that value is translated to the holder of the token's not really going to be worth much. And a lot of these projects tried to build shit and it never worked out. And so it's sort of died off and people have gone, well, fuck it, I'm just going to go where the money has been in the last cycles, the biggest returns, and it's been in meme coins. I think this is going to change. I think we're going to have a return to utility tokens for a reason, 2 reasons actually, that not many people are really talking about. But firstly, you can see how this cycle has been dominated by meme coins. You can see Pump Fund daily new coin launches has gone absolutely crazy. As of March going forward, it's been sometimes 10,000 coins, 15,000 coins created in one fucking day. Insane. This trend isn't going to continue forever. No one cares about utility coins. All the rage is useless meme coins, but this is going to change for 2 reasons. So that's what we're going to discuss in this video. I want to teach you guys what are the 2 crucial factors which I think is going to create a massive bull run for utility projects, why this consumer crypto narrative, which is something new that not many people are talking about, is the next big narrative, and what type of crypto projects you want to be looking out for to get those 10 to 100x gains, okay? So what are the 2 factors that I think is going to create a tsunami of capital that's going to flow into projects with utility? There's 2 main things. Number 1 is regulatory clarity that's going to come under a Trump administration if he's voted in. And the second one is consumer apps that tap into sources of revenue that go beyond purely gambling and trading, things that are very volatile and fluctuate rapidly. And I'm going to get more into these 2 reasons shortly, but I want to explain to you firstly, what is the problem with crypto now that has made these utility projects all die off and become something that is not very popular? Crypto protocol revenue for these utility coins is the equivalent of someone eating their arm when they get hungry for food. Eventually, if you eat enough of yourself, you're not going to have anything left to eat. You're going to bleed out. You're going to die. And that's what these crypto protocols do. The investor in the protocol hoping for mass adoption, buying and selling using the platform that they created, is the same person creating this revenue, attracts new investors to do the same thing. But the problem is, if you're only selling something to people in crypto and they're the only people investing in it, it's a closed loop ecosystem and it's not a sustainable way to grow. And that's why all these cryptos die and they're all basically these short-lived Ponzi's. When crypto moves to an industry that makes money from users, customers, outside of crypto but brings revenue into crypto, it's going to be an entirely different industry and it's going to be a much more sustainable industry. And that's where we're heading towards, but we're not there right now. And when we get people realizing this is what is going to happen, it's going to kickstart the narrative of the consumer crypto narrative, essentially. So crypto's biggest problem is that 99% of the revenue is coming from a closed loop ecosystem. As I just explained, the people who buy the coin to make money from the mass adoption are the people who are also driving the only source of revenue the protocol makes. It's the equivalent of eating your own arm. Crypto revenue comes almost exclusively from inside of crypto. For crypto to grow, we need revenue to come from outside. So this is what we need crypto revenue to look like. This right here is the crypto bubble, and all these red dots represent crypto protocols and apps that people are using. And the ideal world is that this is the rest of, the 7 billion people. They're all using these crypto apps, and when they use a crypto app, they have to obviously spend money, right? There's some sort of revenue to the app. And this is all money coming into crypto. Right now, the only real money coming into crypto that looks like this is people downloading a phantom wallet to buy meme coins. But we need it to go beyond this. We can't just have one little gambling inflow. We need more apps that people are using outside of pure gambling. And so it's going to look like this. There's the traditional world consumer. They download a crypto app. They buy things or whatever they do on the app. And then a percent of that, they spend fees. And a percent of that goes to the holders of the token. And this is going to grow the pie of the wealth within crypto. Instead of crypto growing just from new gamblers coming in, it's going to grow from money spent using the platform from outside of crypto, going to the holders of these tokens, making people within crypto rich without needing new gamblers. And it's going to be able to sort of solve the greater fool theory, where the only way that you make money in crypto is from another speculator entering after you. You're going to be able to make money in crypto without a speculator, but just with a customer to the protocol that you are an investor into. To make money on Apple stock, obviously you do need people to buy the stock who are speculating, but ultimately there is revenue that backs the business. And a lot of these stocks have dividends, so even if the stock is going down, you're making money from the growth of the business. Okay, and that's what crypto is going to move towards, in my opinion. And so let's talk now about more depth on these two factors that need to work out for this tsunami of capital to come in. So first off, we need a Trump presidency, because Trump has already promised if he's voted in, he's going to make the regulatory situation very, very clear. They're going to make simple guidelines, they're going to do it fast, and it's going to fix everything, apparently. And so if we have clear laws around which cryptos are securities, which are not, do they pass the Howey test, what's legal things to do, what's illegal? Once we know all of this, we know what the rules are around sharing revenue with token holders. Because right now there's a lot of projects in crypto that won't share revenue with token holders because they're unclear about what the regulatory situation is. They don't want to get fucked over by the SEC. For example, Uniswap, this is an article, one of the main worries at the time when they were proposing a fee switch was that it could have tax and security laws implications for the DAO, given that it's essentially paying a type of revenue in the form of a sort of a dividend to token holders. This is what most crypto projects, especially US-based ones, are thinking. If we get regulatory clarity, this is not a problem anymore. And so imagine all of a sudden, crypto gets regulated and utility coins no longer have no backing. They're actually backed now by the revenue, which is used to either buy back the token or it's just directly given to the holders of these tokens. And so it gives an actual backing to the projects that you invest into. It's not just, a lot of these tokens only have value now through what's called the speculative premium. They have a value because maybe one day they'll be worth something. But how about instead a world where they actually are worth something today? You can value a crypto based on its cash flow, based on its income, based on its revenue. Now, obviously you look at things like Bitcoin and it's not relevant. Bitcoin, it's not as relevant there. But we're talking about this consumer crypto narrative, which is sort of separate, more businessy than what Bitcoin would be. So that's the first thing. The second factor is basically consumer apps that serve customers necessary and essential spending, habits. So what are the necessary and essential things that people buy in the world? People use Amazon. That's an essential app because they buy things from it, or it's probably more a necessary app. People have online banking, for example. And so, consumer apps built using crypto, blockchains, that bring sustainable and significantly larger revenue sources from outside of crypto. This is sort of what we touched on earlier. So Luca Netz, I mentioned him earlier, he wrote this article a week ago talking about what consumer crypto is. And he basically summed it up here. It's the adoption of blockchain-powered applications that serve billions of people in their everyday lives. Now, we don't have this yet, but this is where crypto is going towards. And this is what he's building on his own chain. I'm mentioning this because it was a great article. I'm not paid or there's no behind-the-scenes trickery here. This is just something that I found very interesting. What he said here with this photo is that as crypto grows, we are entering different types of spending. Discretionary spending, as he explains it, is spending that people do optionally. It's for mostly entertainment purposes, it's for gambling, social, trading, casinos, betting. It's just things that people do for fun and entertainment. That's what crypto is right now. And the reason that crypto is just an industry where it's basically just only discretionary related things that people are using, this is for the same reason why when the internet was invented, one of the first major use cases was pornography. It's because of the reasons that he gives: fees, geo restrictions, chargeback risk, and censorship. These 4 reasons that he gave, reasons why traditional businesses will stay away from the discretionary spending industry, because there's a lot of bottlenecks and difficulties, and this is a gap for crypto to fill in. But basically what Luca is trying to say here is that crypto is not just going to be this little gambling casino forever. Eventually, consumer apps are going to be built that appeal to consumers' needs that go beyond just gambling. It's going to be things like, for example, he lists them here: DeFi, Aave is heading in the right direction, but more beyond that. Online banking, credit, tokenization, insurance, data, IoT, identity, voting. All of these different use cases that go beyond just pure gambling and fun will eventually be built and used by users who are now interacting with a crypto consumer app. And as we move more this way, the user growth goes up, the revenue goes up, and the amount of adoption that these utility projects and tokens will get is going to go up as well. And because while we're in the discretionary phase, obviously gambling meme coins is the thing. But when we move this direction, it's going to go back to utility. I hope you can see why now. And so just to sum that all up, as crypto builds consumer products that target necessary and essential spending, we open up to a 100 times larger market and a more sustainable source of revenue. Why is necessary and essential spending more sustainable? People love to gamble when they have money left over. In a recession, people gamble less. One of the best indicators actually of a recession is strip clubs. How much in tips are strippers getting? Strippers, they go out of business in recessions because people spend discretionarily. And it's the same for crypto. Crypto sucks in a bear market because people don't have money left over. And so discretionary income for a protocol is very volatile. One year it's like this, the next year it's like this. And so this is why it's not a sustainable business model. It's just volatile. One year you're printing, the next year you're dead. When we break crypto into this necessary and essential category, we're going to find more sustainable sources of revenue. When you think about it, right, which businesses are recession proof? It's the ones that people need even if they don't have much money. People always need food, people always need clothes, people always need the cheap things. That's the essential spending that never goes away. Some businesses actually go up in a recession. The essentials sometimes go up in price because people really start buying the essentials more than the discretionary. And so I know this is sort of businessy more than crypto, but this is important if you want to make money where crypto's going. So let's imagine a future now. Let's future predict what the world could look using second and third order consequences. Crypto regulation is very clear. Imagine this happened. Trump gets voted in, everyone's happy. You're not going to be sad when Trump's in, right? And then projects know what they can do and what they can't do. The tech is built enough to handle tens of millions of users. That's going to happen eventually. Consumer crypto, the narrative behind that, starts to take off, driven by various teams building blockchain-powered apps that aim to serve billions of people, right? So these apps are starting to get popular. The apps are not just for gambling, they're for other things like online banking and DeFi and all these different cool industries that are starting to take off. And so then all these new narratives start to emerge that we haven't seen before or only seen briefly. Imagine a Visa competitor, Cash App competitor, the United Health Group killer. This is the biggest insurance company in the world, $500 billion valuation. Imagine a crypto-related insurance business starts to try to take off. And then you start getting narratives like this. So let's imagine Visa gave 1% in dividends, right, every year of the income that they make. Well, the Visa competitor in crypto gives 50% of the revenue to token holders. And imagine if this crypto competitor gets even 5% of the transactions, the adoption that Visa has, and it's giving 50% of the dividends. It should have this valuation. This is what people are going to be formulating as the narrative for why they are buying these utility tokens, because it's going to make sense now. You can buy the next 100 billion company before it explodes in growth. You can buy the next Visa. United Health Group is worth $500 billion. If this project just gets 5% of the insurance market, it's going to be worth this much. So you can start to see like how the narratives could form, which could make these tokens worth billions of dollars. There's going to be a world where crypto can grow not just through new speculators entering, but from fees accumulated from non-crypto user adoption, which increases the wealth of token holders of these mass adopted crypto protocols. Let me put that in simple words for you. Right now, crypto only grows when speculators enter. But in the future, when these protocols in crypto have millions of people using them from out of crypto, these people are spending millions of dollars in fees from buying, selling, keeping their money in the banking account, whatever it is, and you're getting this money
because you're a token holder, that's wealth accumulating in crypto natives' hands from non-speculative sources, which is a much more sustainable source. Because the speculator is only going to come in when there's a bull market. They're going to go away in a bear market. But if a crypto app is used by 100 million people, it's just going to keep going. Because it doesn't matter if it's a bear or bull market, it's going to keep relatively consistent if it's a necessary and essential business. And that's where crypto is going. And that's how we break out of this zero-sum greater fool game, where the profit of the people who are the investors in the token is not just from the greater fool buying after them, because they actually built a fucking app that people use outside of crypto. And so, which coins to buy, sir? You're all like, fuck it, like, stop talking, like, tell me what to buy. This narrative is too far away for me to give you any specific coins right now. But this project, Abstract, a layer 2, built by Luca Netz, who runs Pudgy Penguins, the largest NFT project. This guy's great at what he does. I think the direction he's building and the mission that he has is perfect for getting the most amount of adoption. And I think you need to be keeping an eye on this project. If it launches a token, probably worth investing in. If there's cool apps launching on this chain, niche viral apps, I think that's worth looking into. Let's talk about that a little bit. So Luca, in this article, someone asks him what app is going to get really popular. And he basically says here that biggest opportunity around tokenization is the tokenization of influence and finally being able to make influence tangible. So Friendtech tried to do this, BitClout tried to do this, and there's others that did too, but they didn't get it right. He basically envisions a project that's sort of like Pump Fund, mixed with BitClout, mixed with Polymarket, mixed with Instagram style sort of aesthetic. And that could be one of crypto's most valuable companies. So that's one thing that you could be looking out for, that the founder of Pudgy Penguins is telling you about. He would have a good idea about what could get popular. Other than that, another way that you need to look at the apps that you want to be investing in, or the protocols that you want to be investing in, is most consumer crypto product, or most tech businesses in the world started off when they were first launched as a really niche product. They started off solving a very niche problem. For example, Amazon. Was Amazon always a business that owned Twitch, or that music streaming service like Spotify, or its own Prime Video thing that was like Netflix, or its own book audio listening business? No. Amazon was a online book selling website. It was just a book marketplace. And they've evolved over time. So what they did was they solved a very niche problem, and then they expanded out and they grew to more and more people. Apple, same thing. They made the iPhone, and then they also created their own cloud storage. They made watches, they made computers, headphones. They've done everything. So in crypto, I expect, and Lucas said the same thing, that we are going to see some sort of niche viral app get really popular. Get like 10,000, 50,000 loyal users who really love the app. They're like the power users. Solve the problem that these people have. And then expand out and offer more things. So maybe the app is some sort of social trading app where you can invest into your favorite creator. And then it expands out the wallet interface to allow you to invest into DeFi. And then the wallet app interacts with credit cards. You can connect your existing credit cards. And then you can use the app to spend money anywhere in the world. And then you can get your own online bank account and you can start interacting with all of this DeFi stuff. You can integrate it into gaming, and then, like all these different things you're going to be able to do, which expands the product to more and more and more and more people. That's probably what it's going to look like. You're probably not going to want to buy the project that says, we're just going straight to the first billion people. Probably going to start off niche and then expand out from there. For example, Binance, another crypto example, it was an exchange and then it became a bunch of different things. They launched their own Binance Academy. They had their own launch pad. They've done a bunch of different things, right? And they've expanded their service out to many different types of things within crypto. So that's sort of what you'd be looking for. And this is a visualization of how it looks, right? You solve a niche problem, and then once you've solved it, you solve bigger problems that solve more people's problems, and you get more users, okay? So to summarize, in one sentence, what we've just gone over, regulatory clarity and the consumer crypto narrative, I believe, will be the saving grace for utility-focused projects that are actually trying to build real shit. And that consumer crypto is the number one narrative for 2025 and 2026 and onwards. Now, obviously, this narrative is early days. It's going to take time to play out, maybe multiple years. But if you're looking to stay up to date on this narrative and know exactly what sort of coins you'd want to buy, when to buy them, if you'd like to stay updated on the thesis as it plays out, and if you want to work alongside my private mastermind community of other like-minded investors just like yourself and make crypto quite simple and hands-off, and you don't have to do the guesswork of figuring out which coins to buy, then you might be interested in joining my private mastermind community. The website is danscryptomastermind.com. You join by application only, so if you're interested, go over the website, have a look, because what I teach in this program, in this mastermind, is basically what I did to make millions of dollars from crypto, and I give you all the ongoing strategies that I follow to continue to make further millions. And that's sort of how it works, okay? Again, thank you guys for watching as always. If you have any questions or feedback, leave it in the comments below. Thank you for watching. See you in the next video. Cheers.